All right, let us talk about some of the mid-caps that are in focus today. Omkar Specialty Chemicals makes an entry into the vitamin segment. The company is planning to begin manufacturing of vitamin C and folic acid from Jan 2016. To discuss this and what it means for the company outlook, I'm being joined by Omkar Herlekar, whole-time director at Omkar Specialty Chemicals. So thank you so much for taking the time out today. Can you take us through as to what these plans are and what this new the new vertical that you're entering, what will it mean for the company going forward?
Right, great. See, basically, we will be venturing into vitamin C and folic acid, and this will be done in our unit number 5, which is there in Chiplun district, Ratnagiri, and we are expecting the production to start by January.
How much of an investment will this entail over the next couple of quarters? Can you share some details on that?
Well, see, already the investment is done. The capex is already done. So we need not require any capex by FY18. And the current capex is, capable to take this business to around 200 crores. And I particularly mean this vitamin C business.
Okay, and I'm guessing 200 crore, you're talking from a top line point of view. How much of on the bottom line contribution do you believe will this business start contributing to, let's say, over the next couple of years?
It's of around 25% from this product.
25%. And
right.
And what kind of potential do you see? Is this more from a domestic point of view? Are you looking at exporting as well? If you can share some details.
Yes, see, basically vitamin C is one of the very essential ingredients for the human life system, and it is not only a part of the medicine and the drugs which are there as in the form of multivitamins, but also it goes into all the foodstuffs, a lot of variated drinks, and it has a very vivid application like that. And the market is tremendously huge. If you see the IMS data, the market is somewhere in the range of 15,000 crores for the entire globe. That is, the entire world market is that much. But we are currently focusing preliminary on the domestic market because, we already have some customer tie-ups with our existing products who are also buying this product, vitamin C and folic acid. So our first target would be to target the existing buyers. And then subsequently, if at all our production capacity permits, then we will be intending to export also.
Can you give me a rough breakup as to what kind of revenue contribution do you have on the domestic and the export market right now?
It will be like 40-60. 60 will be domestic and 40 will be exports.
So then, is there a case for that component to actually increase? Because what I understand is you're targeting new markets like Australia and New Zealand as well.
Right, definitely. But for this vitamin C and folic acid, typically India is a very big market. So definitely we will first concentrate to, agglomerate all the Indian buyers, and thereafter production capacity permits and remains, then only we will be, planning for exports. I'm typically talking about the vitamin C and folic acid. For our other products, yeah, definitely we are venturing into Australia and New Zealand market by next year. But for this vitamin C and folic acid, we will be first of all ensuring that all the local requirements are completed from our production.
All right. Now, taking a cue from what you're actually saying on a larger business point of view itself, on a full business scale itself, what kind of guidance are you holding for FY16 on the top line and the bottom line? What kind of growth percentage do you expect to clock?
Well, we'll be growing very steadily. We'll be posting a growth of around 30-35% in FY16. So that would be our growth rate, and we'll always maintain a PAT level of around 10%.
Okay. In terms of the way some of the other developments have been panning out, what I seem to understand is you'll be looking at acquisition of a domestic company as well, dealing with formulations and dosage form with good overseas marketing. Can you take us through that if there are any updates on that?
Right, definitely. See, we are very much enthusiastically and very proactively looking for some formulation manufacturing units, and definitely we are very much backward integrated in our API division. So we will be deploying our own APIs to make the formulations, which will make us more competitive as well as the top notch in this segment. And definitely for typically formulation industry, which is catering to veterinary formulations, we will be definitely looking out for.
Okay. Now the other interesting bit is, can you take us through, you already said for the vitamin business at least, you've already got the expansion somewhat in place, no further capex is required. But on an overall business point of view, are there any capex plan, are there any expansion plan? Because what I understand is you've currently 7 units. Are you planning to increase that?
What? Can you pardon me?
Are you planning to increase that? You've currently got 7 units that you're operating. Are you planning to increase it?
See, already in all the 7 units, wherever the capital expenditure is to be done is already done, and it is standing as a CWIP. So it is just a matter of commissioning the units. Basically, typically, to be more precise, capitalizing the units, the capex which has been done, which will be done in this upcoming year. That is, a part of it will be done in the same year, that is in FY16 only, as well as a little bit of the remaining will be done in FY17.
Okay, and if you can take us through as to what kind of debt picture are we currently looking at for the company level, and how do you see that panning out, let's say from an FY16 standpoint?
You mean
the current debt on books, yeah.
See, the current debt profile as on today is around 210 crores is the total debt, which is comprising of long-term as well as short-term. So, that is the current debt, and going ahead, since the working capital cycle is very much nurtured, and we are at a very comfortable position in the working capital cycle, which is nearly 90 days, so it won't foresee to, draw still more debt on this front. We can very well manage the business and the business growth with a little bit incrementation in the debt. That is what I feel.
Omkar, you mentioned in one of your previous responses right now that you're aiming for a 35% growth from an FY16 point of view. Can you share some more details as to where you're going to be getting that? Is it going to be domestic markets? Is it going to be exports? How do you plan to achieve that target?
Wonderful. See, we definitely have interest. Basically, when I'm saying 35% growth, it is basically expressed by basically two variables. One variable is the order book with the current customers which you are having. That is number one. And number two is the past track record of the buying. We have a selected pattern of the customers, how they buy. We are having somewhat kind of the pattern of that. So based on that, we'll be able to say that 35% would be a very conservative growth. This is a conservative number, which I'm saying it may be more also, but on a very confident front, I'm telling that minimum 35% will be the growth rate in this. As far as what the segments will be growing into, definitely yes, we will be growing into resolving agents, we'll be growing into veterinary APIs, and we'll be growing into vitamins. This will be the three major verticals where our growth will come out from.
Okay, and just one final comment, going into the new year out here, going into 2016 itself, is there a certain, we already spoke about Australia and New Zealand, which have been on your radar. For investors who are watching right now, what is that one factor that they probably need to focus on as far as the company is concerned that you will be strategizing to, or that you'll be working towards in 2016 as a growth avenue?
So I didn't get your question.
I'm basically trying to ask one factor in 2016, or one certain market or one certain product which the company will be focusing on, which will be a big game changer for you in the future.
So very frankly speaking, we are very much diversified, and we believe in diversification of products as well as customers. So we definitely try to go into those products which are multi-customer based, where the customer base is very broad. So we definitely like to de-risk our business model by having diversified customer base as well as diversified product base. So yet if you are saying what kind of exact product, there may be some top 3 or top 5 products. So like albendazole is really a product of aspiration. Then second is a product called Hulkvinol, which is a veterinary growth promoter. So that is also a product of very good aspiration. And third is the vitamin C. So these are the 3 products which we are expecting something big out of it. So that is all.
Just once again to reiterate the fact that, Omkar, just hold that thought. I want to just bring up the stock as well. It's at the day's highest point right now, almost 4% higher. And as we're just highlighting the outlook for the company, you've seen the stock react to that as well, almost 3.7, 3.8% higher. We spoke of the potential, the growth that you're targeting of 30-35% for FY16. What about margins as well? Can you share some perspective as to what kind of margin outlook are you working with?
I again maintain it. The margins, the product which will give me a EBITDA levels of 20 to 25%, as well as the PAT levels of around 10 to 11%, will be definitely venturing into such products only. We won't be venturing into any products hereafter which will give any EBITDA margins below these levels.
So 20-25% is what you would target for, let's say, FY16, FY17 as well?
Definitely, we will definitely not go into any products which are below this.
All right, Omkar, fair enough. Thanks so much for taking the time out today to talk to us and share the perspective as far as what's in store for the company going forward from here as well. And congratulations on the new vertical entry as well that we were just discussing there. That's the management of Omkar Specialty Chemicals. Stock seeing a spike as we were interacting with the management out there. 3.7, 3.8% higher as far as that stock's concerned. And you can see a little bit of a bump up as the management was highlighting their plans for FY16 and going into FY17 as well as to how the revenue could really play out and what kind of growth figures are they targeting going forward from here. All right, moving on then. Markets keenly watching developments on GST. Now, the bill is set to be tabled in the Rajya Sabha this week. Finance Minister Jaitley will meet with